What's going on, y'all? So, in this video, I'm breaking down the Dow Jones, the moves that happened this week, from Monday through Friday, and we'll be looking at some prep work for next week. So, I currently do have a limit order in the market to sell, um, Dow Jones, a short-term sell, and that's around 42,500. We'll go into that. Risk to reward potential is um, pretty much from about 700, risking 100 to make 700. So 1:7, and pretty decent, pretty sweet. And without any further ado, let's get it, let's get it, let's go. So this week, what happened was the market pretty much made a bullish move from the bottom there. On a weekly basis, we had a bullish candle. And if we look at the daily chart, we can see that, okay, cool. Price has been maintaining this level of 42,900 and hasn't broke that since, well, since forever, right? It created this level back in March, and then it hit it again in May, hit it again in June, and we're still in June and we're heading up towards that level. Now, on the lower time frames, we can see the structure more clearly. So this one is a little bit fishy. I'm not gonna lie. It's a little bit fishy in the sense that um in terms of direction, if you're not clear, then it's better to stay out. But if you can see the direction and see where it's going, then definitely. Definitely, we can take part once we know what is going on. And we see here the moving averages just crossed. Price is above the the moving average on the daily chart, and we're seeing, okay, price is basically in a range between 41,200 and 42,900. That's pretty much a range of about 800 plus 900 makes it 1,700 uh pip range, or 1,700 point range. Um, $1,700 move on the Dow Jones. So with that, we're seeing that, okay, it's pretty much flat since May. And right now, trying to decide and find a way. And if we look at the lower time frame, well, not lower, but the H4, mm, it is lower than the daily, but it's not really a small time frame because one candle is 4 hours. That is quite some time. So the candles here are pretty solid. And this is where I base my main structure. My main structure of bias and direction, I base it off H4, H1. And in this case, what we're seeing is price pretty much came from here, uh, end of May, pretty much made a higher, a low over there, and then created higher lows, higher lows, and then this level here maintained, broke, and these lows were taken out, coming back to this level here, which is an exhaustion zone, and then price started to move up again. However, in all of that time, price also made a lower high over here. And this lower high pretty much set the tone uh for June and this week basically. So if we had to get more details and see exactly what is going on here on an H1 time frame, we'll start to see those higher lows much more clearly. So if we see here, price has been making consistent lower highs. Yes, lower highs, my bad, not higher lows, lower highs, lower highs. So the market has been trending downwards, lower high, lower high, lower high. And what we are anticipating is the next lower high. However, we need to be cautious of this higher low that just formed here, meaning that we could see price push a little bit more, a little bit more. And depending on how the market opens, um, we could see price rocket through and come all the way up to this daily level, which is the 42,900 level, which is the top of that range that we saw clearly on the daily chart. And if price comes up here and gets rejected, sellers come back into the market, then we could see this thing move south towards that 41,800 level, which is our projection. And pretty much just sticking to this range. You'll see here we have our little arrow drawn from Thursday. Friday, pretty much just watch. Monday, we'll probably get the prices that we are looking for and monitor to wait for that bearish volume to come back into this market and pretty much write it down. And 1:7 risk to reward going for this 41,800, and if going for the 41,400 level, then or the 41,200 level, then we're looking at that full 1:17. um so yes, pretty much on this chart we're looking for a rejection up into these 42,500 levels, and waiting to see bears come back in, take out these highs here, these liquidity zones, and see price moving down again. I'll be watching. I'll be waiting. Today's a Saturday, and what we can pretty much do is go through the moves that took place this week, maximizing on those, knowing that, okay, so Monday was over here. Monday was here. Cool. Monday came, and we pretty much knew that already this market is making lower highs. How do we know that? Because we can see it here. Lower high, lower high, lower high, lower high, lower high. And then it made this lower high. And after making this lower high, it pretty much hit this low here, lower low, and came back up to test this high. So now this high, we can call it a high. It didn't break structure because this level was never broken. It was tested. Tested candles. These are all tested candles. Tested. And then we got this engulfing variation here on the H1. That's a signal right there. An engulfing pattern. And on the M30, there's a much clearer picture in terms of details. And The next level is pretty much price started to push down after that engulfing push, 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 hit this level, found some support here, and then came up and created another lower high. Lower high, another opportunity to enter some of that into that selling power. So here we had multiple confluences here. We had multiple confluences. We had this green resistance line, and we also had this previous support, previous resistance being tested again. That's confluence, and then pretty much get the signal and then down. And then same here with this level here. This level also had confluence. So this is two entries already identified. One, two. And entry number two is at a level of confluence. It's testing the dynamic resistance, 66 moving average and the 33 moving average. And it's testing this key daily zone of 42,400. Pretty much hit that level, bam, in, and pretty much exit your positions right here at support. Pretty much exit your positions right here at support. So first one goes in Monday. Monday evening, and we're pretty much risking want our stop to be all the way back there. And we're going for these lows here. Not going for anything too ambitious. And 1:4, or this is a 1:3. Almost 1:3. Almost 1:3. And on the second entry, it's a 1:2. 1:1.5, and that's a scaling position. So this is one trade. This is just the add-on here, and pretty much out by the end of that day. Held this for 2 days, Monday evening through Tuesday, the whole day. Tuesday during New York session, added that second position. So now two positions on this, one up here, one down here, and then Wednesday morning, or New York close on that Tuesday, pretty much cash out, call it a day. And then Wednesday morning, price ran up to that level of resistance again. This one here. And this level got tested again. It got tested. And this is basically where the third opportunity for the week was. Third opportunity for the week. And on this level, price pretty much rocketed down, made a new lower low, continuing its bearish structure. And this is why we are bearish, because we are trading with that bearish volume. And now what we're seeing is a pullback, creating or searching for that next higher low point, lower high point, lower high point, that next lower high point. And pretty much over here, the third entry would be looking something like this. Just below here, the M30 will have a much cleaner entry, and pretty much that's what this move is looking like right there. In it to win it. You hold it. Yeah, in Wednesday evening and pretty much writing it down Wednesday evening, Thursday morning, all the way through Asia, Thursday morning through London session, all the way. And then New York session, it finds a bottom. Boom. At this point, I saw that this was played out and I saw it sitting at heavy support and contemplated buying. However, my bias was not bullish and I don't want to be like a cheeky monkey. So I decided to stick to my bearish, wait for that next lower high. And pretty much next day, Friday, boom, gapped up, continued up the whole day, and pretty much just had this little pullback here towards New York session. And now we're still moving north. And these are the three high probability moves off of US30 for this week, to the bearish side that I identified. And for next week, we're pretty much waiting for that next lower high point on the Dow Jones. All right. Now, okay. All right. Um, so yeah, tune in to the next analysis. And thank you so much. Like, subscribe, and when the market opens next week, we'll be ready. We'll be waiting, and we'll pretty much be keeping our eyes on these levels here: 42,480, 42,500, that green line over there. And then all the way up there, we have 42,900, which is the top of that range again. And these are our major key levels that we are watching into next week. I do have a buy limit on this, not a buy limit, a sell limit at that next potential lower high point. Um, but yeah, depending on how the market opens on Sunday or Monday morning slash, um, I'll be adjusting. If things are playing out how I anticipate, then I'll continue to hold and let my limit get executed. If not, I'm happy to delete my limit and come back in stronger with the new week and take it from there. But yeah, peace out, peace out. That was my Dow Jones analysis, weekly recap, and projection plan for next week.